Oil and nat gas both traded with moderate bearishness, specifically natural gas has erased all the gains and it is now trading below the critical resistance at 2.9, or rather critical support at 2.9. So yes, what to expect? Most importantly, the oil dropped towards 6.7476 zone and is recovered a bit now. So what is going to be our strategy? Which position you should take, where to enter, where to exit, how to profit today trading crude oil and net gas. We're gonna see with the help of charts and indicators. This is the second update for the day, and this is the only channel to give you two updates with detailed analysis on multi-time frame, such that you can take a trade with logic and trade with confidence at a particular price point. Thus, subscribe to the channel, press the bell icon, do like, share, and comment, join the free Telegram channel for live updates, and join the channel memberships here on YouTube to support the effort. Let's start first. We look into oil, followed with gas. See, oil on the hourly charts. What did I say today earlier in the day? That see these spikes. If you eliminate now, see if you just eliminate these 4 points, the entire movement is right now engulfed between this narrow trading zone. And right now again we can see oil after dropping here falling back within the same zone, and now on the upside 68.6 again going to be a greater hurdle for it to break past by. So if you see it is staying above 68.6 and 69, you can look forward to a recovery. Right now I can see a sideways movement here. Moving averages have started to converge. The stochastic has seen a rise. The MACD, if you look at after dropping sharp, it is now converging here. This crossover can lead to RSI is also posting a V-shaped recovery here on the hourly charts. And on the look at the 2 hour charts, a V-shaped recovery here, and it has come down to a zone here where we have to be cautious, we have to be watchful. And now once it stays above 68.6, that is the point of time which confirms that we are looking forward to 69.3 and then $70 levels. Yes, possible recovery cannot be denied, because see, right now I can see a struggle here and a breakout here. Now below 67.3 and 67 is where you can say ideally the bears are waiting. Stochastic rising, the MACD trying to cross over again after a bit of retracement. Let's see if it crosses over, it will confirm a further rise. RSI has recovered as well. On the 3, the observation is same on the 3 hour charts, a reversal sign, a bullish candle, flat top, and once it breaks out, this is going to deliver another bullish candle which is going to take it till towards 69. Now 69 is going to be the prime resistance here. So be cautious of the $69 levels. If you connect these two, you will find that it is slightly forming higher lows and higher highs. Where are the highs now? Towards 69.870. Possibilities there. Stochastic rising, the MACD also trading with a retracement rise. The slope here when it was bearish and here is bit gradual. So yes, this is a retracement so far. RSI is trading in a comfortable zone. And on the 4 hour, very important for oil to trade above the 20 period moving average, and that is I also say wait for 68.6 to be taken, and once it stays above 68.6 you can look forward to a greater rise. And how far? Just wait for 69.3, and if that is taken we can look forward to 69.870 as the next target. Achievable levels here, nothing difficult, but yes, you have to watch out. If you look at the 4 hour charts, I have been sharing this, that oil is trading in this box, and it appears it is going to stay in the box for a while. The stochastic rising, the MACD also rising. Look at this, second wave is done and third wave initiating here. Possibly we may see further recovery. RSI rising. Coming to the day. And before we look into the daily charts, if you want to learn this art of trading, join my mentorship batch. And if you just want to trade as per the signals, be a part of my signals channel on Telegram. Connect with me, write an email or ping me over Telegram for your queries. And if you're looking forward to a broker which offers you a stress-free account with lowest spreads and no hidden charges, easier transactions and easier withdrawals from across the globe, you can find the recommended broker link also in the channel and video description. Now look at the daily charts. See, ideally, if you look at these two candles here, you will find preceding candle closed at bottom, current candle starting with the lows and now trying to recover. Now lower highs means lower lows, so a possible move towards 69 should be there, and breaking beyond 69, 69.3, this should become reversal. Now I have been sharing this again and again. See, the candles are shying away from closing below 68, 67.8, which has become a very good support. Now stronger the support leads to a stronger, and thus it appears from here oil can now move towards the top of the channel, and this time if it breaks this channel it is going to shoot up. The stochastic rising, the MACD is bearish trying to convert the RSI is flat. So looking at this very clear. You can buy at 68.6, expect 69, 69.3, and looking at the move here, 69, 69.3 is going to be very, very difficult for it to break past by. But trading above 69, 69.3, I think we are looking forward to a massive move towards 69.870 and staying above this. The next one is 670.5, because if it breaks 70.5 either this week or next week, we are directly landing at 72. So take your trades accordingly on the downside. Now, a selling entry is again at 67.8. If you see it trading below 67.8, sell here, expect 67.5 as the first target. And if it trades below 67.5, stay short. What we are looking at is 67, 67.2, and below this, you can expect a greater correction, chances for which appears to be less looking at the move. Take your trades accordingly. Now, let's move to natural gas. Natural gas, after the bigger decline yesterday, and the crossover here has been trading bearish. Look at the formation, drop sideways movement, and again looking forward to the downside move. Now, if it stays below 2.88, you can take a selling entry, expect it to move towards 2.85, 2.82 levels here. Now remember one more point, it has a lot much of gap to be filled here on the downside. What it can do, it can close somewhere here at around 2.8584, open the next week on a bearish note with a gap down, move slightly lower and then recover later. So this is something which you can expect, because see, it has left a gap towards the beginning of the week. It can try to fill it very, very soon before reversing. Stochastic rising from the oversold. MACD is traded bearish, waiting for it to converge, crossover and reverse. RSI oversold here. On the 2 hour chart, straight bearishness, increasing bearishness, that is what you can observe here. Look at the last three candles, one step, then sideways, increasing body, and now this candle. So this candle is going to be definitely strongly bearish. Once it stays below, in fact, 2.885, you can expect a move towards 2.8685 levels, and below which you can expect more drop. See, I will say 2.86, 2.84. This is going to be the first support zone and prime important support zone, and then the next is 2.8 levels. Be watchful of this. Yes, it is staying oversold on the stochastic. MACD is also bearish and the RSI is oversold here as well on the 2 hour charts. On the 3 hour, the observation is more or less same on the 3 hour charts. Drop and now lower lows, lower highs here. Possibility of a breakout move appears strong here, and thus if it stays below 2.885, 2.88 zone, stay short for 2.8684. Breaking below 2.84, the next destination is towards 2.8. Be mindful of this. And as I said, see, there is a gap to be filled here. What it can do, it can close here at around 2.85, 2.8, and then next week it can start with a gap down, filling the gap here at 2.76, and then bounce back up later again. Stochastic oversold, MACD trading bearish, the RSI is at bottom here. And on the 4 hour charts, the observation is more or less same. See, a step is created. Ultimately, it has to now break beyond 2. And 2.95 is the only level above which today I will recommend you to buy here. As long as it stays below 2.95, we are not going to treat natural gas as bearish. It is creating steps, drop, sideways movement, steps here. Possibly we are looking forward to lower lows. We are looking forward to 2.8, 2.76 zone very, very, very soon. The stock Isaac has come to an oversold zone. The MACD is trading with divergence, trading bearish, looking downwards. The RSI has dropped sharp as well. And when you come to the daily, there is one point to note on the daily charts. Yesterday was a reversal candle after achieving highs, and at this point I have mentioned that we are looking forward to double top. Hitting double top levels, it is trying to come downwards. One possibility that it may try to stay in this box for a while before reversing. Now, staying in the box means it has lot much of downside available. If not more, at least it can fill the gap towards 2.76 very soon before recovering. Now, what has happened today? See, it was trading with divergence from the 20 period. It has come down to 20 period, and now once it trades below 2.88885, you can look forward to a move towards 2.85, 2 point, rather I will say 2.8684 as the first support zone, and then 2.8 as the next. And next week it can fill the gap before reversing. Now, if you look at the stochastic, this is dropped here. The MACD is in green, trying to converge. Remember, on MACD, a red candle today does not mean a complete reversal, but yes, we have to watch out. It is still in green. The RSI has dropped as well. So looking at this, where you should buy, ideally a buying entry today is about 2.94. So if you see natural gas about 2.94, initiate a buying entry, expect 2.98, 3.02, and then 3.05. Beyond this, 3.1, 3.14. Chances for which happening appears to be very, very, very less. On the downside, you can sell here at 2.885, 2.88 levels, expect it to move towards 2.8684. And if it drops below 2.84, stay short for 2.8. Below 2.8 in the coming week, we are looking forward for it to fill the gap towards 2.76. And that is going to be a very, very good support. Hitting the zone, it can again bounce back, or in fact it can drop towards 2.7 and bounce back. So this possibility you should not ignore, but that is a future trade that is for the coming week. For the day, even if it tries to drop, I do not see it breaking below 2.8, but yes, these are markets. Take your trades accordingly. Like, share, subscribe, and comment. Join my mentorship batch, join my signals channel, reach out to me for your queries. See you again tomorrow with my weekly reviews for oil and gas. Do not miss to watch that. Thank you. Have a great profitable trading day ahead and a happy weekend.